Ladies and gentlemen, good morning. Good morning. Welcome to the first annual general meeting for Dolla Financial Services since being a listed company on the Junior Stock Exchange in Jamaica. My name is Ryan Reed, and I'm the chairman, and I'll be taking us through the agenda. But before we do so, I'm going to invite Ms. Trisha Nichols, the Governance and Compliance Manager here at Dolla, to lead us off in prayer. Thank you.
Thank you, Chairman. All right, let us pray. Our Heavenly Father, Jehovah, we come to your Son, Jesus Christ, to thank you today for this wonderful opportunity to have our first annual general meeting of Dolla Financial. We want to give you thanks for the successful times we have during the years. We thank you for allowing us to make it public, to be successful with all our team members. We ask that you continue to bless our directors, our staff, our senior executives, all that participate and invest and make this company a success. We thank you so much and pray that you allow today to be safely done smoothly and all by your arrangement. We give you praise and honor. In Jesus' name, amen.
All right. Can we bring up the agenda on the screen, please? So I'm going to take us through the agenda for today's proceedings. Item 3, quorum and rules. Item 4, call to order. Item 5, presentation from Group CEO. Item 6, presentation of loan portfolio. Item 7, the financial report. Item 8, ordinary resolutions. Item 9, results of poll. Item 10, questions and answers. And item 11, termination. At this point in time, I'm going to invite the company secretary for Dolla, Mr. Jordan Chin, to establish the quorum and communicate the rules of today's meeting.
Good morning, everyone. Chairman, thank you. I'd like to confirm that a quorum is present and that we have received one proxy, which has been noted. I'd like to take this opportunity to outline the protocol for this meeting. For the questions and answers session, questions that were emailed to marketing@dollafinancial.com will be answered during the question and answer session. Shareholders online have the opportunity to submit their questions by clicking the question and answer section, which is located at the bottom of your screen. I advise that you have until 12 o'clock to submit your questions. I ask that you clearly identify yourself by stating your full name when indicating your question online, and also when you're asking and indicating your question in the rooms. We will also allow shareholders who are present in the room to ask questions during this session. We will make every effort to answer all questions. However, we may be constrained for time. Responses will be sent out after this meeting for questions which are not answered during the question and answer session. Please note that microphones will be muted during this meeting. Only shareholders can move motions and second. Shareholders online are asked to use the raise hand function on your screen to do same. Shareholders in the room are asked to raise their hands. We ask that all shareholders log in to the online platform to vote. After resolutions are moved and seconded, the resolutions will appear on your screen. Please note that you have 30 seconds to vote by selecting either the for or against, which will pop up on your screen. Shareholders in the room, please note that we have provided a QR code on your chair, which will take you to the company's annual report and online registration for today's meeting. If shareholders online are having difficulties, any technical difficulties, we please ask that you call our help desk at 876-927-4881. The number again is 876-927-4881. If shareholders present are having difficulties casting your vote online, I will accept your vote by raising your hand in the room. A recording of this meeting will be uploaded on the Dolla's website, and this meeting will also be streamed live on Dolla Financial's YouTube channel. Thank you all.
Thank you, Jordan. All right, ladies and gentlemen, this meeting is now called to order. It is now 11:15 a.m. Today is the 1st of June, 2023. My name is Ryan Reed again, as I'm chairman of Dolla Financial Services. To my left is Mr. Kadeen Mears. He's the chief executive officer. To his further left, there's Trevine McKenzie. She's the chief financial officer. And we have Ken Carr, who's the chief operating officer. In addition, we have members of the board in attendance. We have Dr. Michael Banbury. We have Mr. Christopher Young. We have Mr. Dane Patterson. Apologies for absence for Lisa Lewis and Tanya Waldron Gooden. Item 5. We'll now take a presentation from the group CEO, Mr. Mears.
Thanks, Chair. Ladies and gentlemen, esteemed guests, shareholders, members of the board, my colleagues, good morning, everyone. It is my great pleasure to stand before you today as the CEO of Dolla Financial Services and to address you at our first annual general meeting. This gathering is a significant one as it serves as a milestone in our journey as we continue to review our achievements, our challenges, and the future plans of the company, Dolla Financial. First and foremost, I want to express my sincere gratitude to all of our shareholders for their unwavering support, trust, and confidence in Dolla. Your investment and commitment have been instrumental in our growth and success. We deeply value your partnership and strive to continually meet and exceed your expectations. For us, each shareholder is a partner, and a partner that we have as family. I remember recently, upon re-entering the country from a trip, and I was at the immigration, and the immigration officer took my passport, and she looked at me and she smiled. So I said, "What's up?" And she said she got her dividend check. So she's one of my partners. And the feeling, walking out was a very fulfilled feeling, knowing that we have built a company that outside of our capital gains, we're able to actually cut a check back to the shareholders who actually cut a check to us in the first place, that they can, bring that to the supermarket, something that is very tangible, so that is very meaningful to us, and we seek to continue to do that through our partnership. As you know, it's very important. Our shareholders are very important to us. We basically started a trend of doing our earnings call every quarter, which allows our shareholders to be updated with all that's happening with the company, all our successes, all our challenges, and know exactly, feel free, to participate and feel a part of the Dolla family. The past year has been one of remarkable accomplishments and transformative changes for our company. Despite the challenges posed by the introduction of the Microcredit Act, high interest rates, global recession threats, lingering effects of the pandemic, Dolla has delivered strong results, surpassing all key performance indicators. So today, I'll be covering 4 key areas in my presentation with a comprehensive overview of our progress and prospects. The 4 key areas that I will be covering will be our milestones, financial highlights, strategic objective, and outlook. In terms of our loan portfolio, our COO, Ken Carr, will be delivering on that presentation. And of course, the financial results will be delivered by our CFO, Trevine McKenzie. Again, I'd like to take the time out to acknowledge, our board of directors, and especially our chairman, Ryan Ryboy Reed, who has been very integral, in terms of support to the management team. Our board of directors are probably similar to our management team in terms of their continued unwavering support. They're very knowledgeable of the day-to-day runnings of the business, very supportive. Whatever challenges might come up, they are there to give guidance. And in terms of corporate governance and structure, they're also there as well. So I want to thank my directors again for the support for the last financial year. I spend a lot of time now on, the TV and being a public figure and stuff. But while I'm on the road, probably trying to raise capital for the business must go on. So I want to take the time out to thank my management team and the rest of the team for their full support and for giving me that confidence to know that the ship is steered in the right direction while I focus on more strategic goals for expansion. So we'll move into our milestones and we'll look at the financial year ended 2022. During the period of June, the most significant milestone was our IPO. We successfully IPO'd and oversubscribed by $5 billion. We went to the market. We sold 20% of the company to the market and raised $500 million, and we were oversubscribed by about $4.5 billion. And that, for us, signaled that the market had total confidence in the company. I think it's probably the biggest oversubscription the junior market has ever seen. And in terms of subscriptions by numbers, I think we had 14,000 shareholders, which was the most shareholders ever. So that was another signal from the market in terms of the confidence in the business model and in the team. Right after that, we went to open our Portmore location, which to date is very self-sustainable, profitable location for us. After raising that $500 million, we deployed that capital within the first month. And, in hindsight, we realized that this would have happened. So our broker at the time, we approached our broker and said, look, we need to do a bond raise. We went to the market to do a bond raise for $1 billion with a possible upsize to $1.5 billion. And we were able to successfully raise 1.1, close to one, think about 1.2 billion closer. And this capital really enabled us to further push the growth of the company and enabled us to capitalize our subsidiary, Ultra Financier, which is run by our CEO, David Henriquez. Ultra Financier was basically a new form of lending solution that focused on asset-based lending, a new concept here in Jamaica. By month 3 or month 2 after launching Ultra was already profitable, and the delinquency remained at closer to 1-0 in terms of percentage. The book is fully secured by property and motor vehicle. So during the month of November, we launched Ultra, and right after we received our microcredit license. This was a very tedious process. Getting this microcredit license, it was, the regulators were very diligent, in the process, and thankfully we were within, I'd say, probably the top 5 or top 10 companies to receive their microcredit license, and this gave us the confidence now to continue to push forward. At the end of December, based on our performance, we have our budget. What determines if we pay a dividend or not is, of course, the board of directors, but a signal for the board of directors is performance or overperformance. So if the company has hit its milestone or its budget or exceeded its budget in terms of its bottom line, then the company, the directors might take the decision to pay a dividend. So in December, we paid our first dividend. Further down the line, we've been working on, conditioning our customers to use alternative methods to make payments, because originally each branch had customers walking into the branch to make their loan payments by cash. Obviously, we know what's happening with the courier business and cash business in Jamaica, so we had to move quickly in terms of going cashless. So by the end of last year, we went fully cashless with all our locations. So all our payments now are received through other methods, whether it's through bill payment channels, online banking, etc. By the end of the year as well, we grew our customer base to 7,000 customers, and our loan book increased to $1.7 billion. And we dispersed to date $4.3 billion. That was at the end of 2022. To date, I think our loan book is about 2.4 billion. So we've increased that probably by 600 million since the end of last year. All right, so some financial highlights, and we look at the segments by one, profitability, or profit segment, and by loan book. So in terms of profitability, obviously most of our profit, so just to take a step back, we have Dolla Financial Services listed on the Jamaica Stock Exchange, which also has 2 wholly owned subsidiaries, Ultra Financier Limited and Dolla Guyana Limited. Dolla Financial Jamaica is the major contributor to our profit with 247 million, which is 83% of the total profits contributed. Dolla Guyana is about 37 million, which is 13%. And as you can see, Ultra, that started in November, was it? By the end of December, had a profit of $12 million. So we're really excited about the future for Ultra. Guyana is a new market. So, of course, we're still there learning the market, and we don't want to be too aggressive in a market that, we are new to. And that's the same, kind of temperament that we will have as we look to expand in other Caribbean countries. In terms of segments by loan book, majority of the loan book is here in Jamaica, $1.3 billion, 74%. Dolla Guyana is at 177 million, which is 12%. And as you can see, Ultra again, in the first 2 months, grew to $250 million, which contributed to 14% of the total loan book. So our total income in summary was $740 million, and our profit before tax was $296 million. And our total loan book as at the end of December 2022 was $1.7 billion. In terms of the stock price and the stock price performance, we IPO'd Dolla at $1. and we were able to grow. Well, we don't grow the stock price; the market does, right? The stock price grew from, I think it hit a high of $3.85 or somewhere thereabout in its peak. At the end of the financial year, it ended at $2.88. Recent releases by stock brokerage houses and analysts have determined that the price is set to appreciate. I saw one notable brokerage house say that the stock price rightfully should have been at $3.83, but I leave that to the market. Strategic initiatives, relationship building, and partnership. What's very important to us is, what we do in the community, both internally and externally. What's becoming very important is that they've renamed it from CSR to ASG, your environmental social governance, from corporate social responsibility, but it's kind of one and the same. So we continue to establish, our contribution to such. Some of the partnerships that are noted here are, our medical partnerships with our MediPay product. We did that partnership with Bay West Wellness Hospital. We also focused a lot on renewable energy. So we did a partnership with RTA Bids, which focused on providing solar solutions to both residential and commercial clients. So basically what we do there is we look at ways to not just lend money, but lend money to segments of the market that will create an impact, a positive impact on the environment and on the social well-being, of the citizens. Looking furthermore in terms of some of our contributions, earlier, I think it was the end of last year, the Jamaica Stock Exchange had its telethon, which focused on basically a version of the stock exchange they want to launch that focuses on corporate social responsibility and companies that play more corporate social roles in the economy. So we made a donation of $1 million, which went towards the stock exchange and that initiative. We also made a contribution to the Spanish Town Hospital, the University of the West Indies Hospital as well. We did a special thing at the Make a Child Smile initiative at the Maxfield Park Children's Home. And all of these contributed to our financial results. So it's like paying it forward, and the blessing will come back. In terms of our team and increased employee engagement, I think Dolla Financial has one of the lowest staff turnovers. Most of the faces that are here, and I've been seeing them for the last probably 5 years. So I think that's an indication that the company is growing and the team is growing with the company, and whatever initiatives that we have internally is very engaging and fosters the retaining of our employees or our talent. When we did our IPO, what was important for us was to ensure that each of our team members, our employees, felt a part of the process. And what we did was we launched our ESOP, which allowed each employee to own shares in the company. And how we did that was that we basically bought the shares on their behalf, and they were able to own that share and watch it grow. So it doesn't matter if you are a customer service representative in SAV or you're the CFO in Kingston, what your small contribution will bring to the financial performance and how that will appreciate in value for your stock price as well as for your dividend check that will be cut based on performance. We also introduced our pension program, and also we introduced our paternity leave program. I have 2 kids now, so I don't think I will be utilizing the paternity leave in the near future. But it's very important to us to ensure that these are some of the benefits that we ensure that the team is able to take advantage of. In terms of, other work culture efforts, we have our annual awards and different engagement activities. Strategic initiatives. So we look at two things here in terms of our strategy: secured loans and diversification. So I think COVID taught us a very valuable lesson, and that is we have to be very strategic and we have to stay diversified. And what we've learned from COVID is we need to ensure that we are running a business that one can withstand different shocks that can happen, whether it's macroeconomic, whether it is environmental, whether it is health, a pandemic. So one of the things that we did is that we basically moved to have a more stable loan portfolio that focused a lot around secured loans, so that it provides more of a foundation or some form of, to use about the same word, security for the loan portfolio. In terms of diversification, we also decided to diversify or to ensure that we don't at any moment be too penetrated in one segment of the market. So for example, with COVID, it taught us that, look, you can't have 60% of your loan portfolio be focused on tourism. It has to be a bit more diversified than that, because if something like a pandemic happens and you're not diversified, then you're high in risk. So the board of directors actually implemented policies that are very strict in terms of how the portfolio is diversified between construction, transportation, and Kenroy will deep dive into this. Another important thing for us in terms of our strategy, I'm not sure that we should be giving out our strategy, but I think we're public now, so we don't have any choice, right? Loan to value ratio. To ensure that when we repossess an asset, it can be liquidated in a timely manner. We kind of have a rule of thumb in terms of loan to value, 50%. So if the loan is $1 million, if the asset is worth $1 million, we wouldn't give more than $500,000 on a loan. In terms of flexibility, I think that we're probably one of the most flexible. We stay current in terms of the needs of the customers, and our personalized loan solutions are actually directly influenced by feedback from customers. In terms of outlook, local expansion. We're in the process of establishing new branches. The Microcredit Act and coming under the regulation of the BOJ has somewhat slowed the pace at which we can open a new location, because it has to be approved by the BOJ. So before the regulation, we would have been able to open a branch in probably a week once we identify a space and a team to work within a branch, but now it might take us probably 3 to 4 months to get the approval from the BOJ. In terms of new market and regional expansion, it's the same process. Even though we might be opening a branch in St. Lucia or Barbados, we still have to get the go-ahead from the BOJ. So these are some of the initiatives that are on the desk of the BOJ currently being reviewed, and hopefully, with time, the turnaround time for the BOJ will cut down, because we understand that it's a new act, there are limited resources there, and they have a lot of microcredit licenses assessing at the same time. So hopefully, in due time, the speed of the turnover in terms of getting feedback from the BOJ will increase, so that we can move quicker with our expansion efforts. In terms of revenue target, we're targeting this year revenue of 900 million. In terms of earnings per share, we are targeting an ambitious 20 cents. in terms of earnings per share, in terms of capital, raising additional capital to meet the loan demand and grow the loan portfolio. So two things based on our quarterly first quarter results. If you've been keeping track of our monthly profitability, I think it's between 40 to 43 million. So if you annualize that based on a run rate, that would land us at about 500 million in profitability, profit before tax. Last year we did 293 million. And that would be without raising additional capital. Now, I mean, the business is very straightforward. If we raise $1 billion and we lend it out, we can only rely on cash inflows to relend. So it's a business that can continually will need capital. So we continuously have to be, on the road, knocking on new doors to access capital. So while the team is working, I have to be, knocking on Ryan's door to help me raise some capital. Or Chris is there. Chris is trying to raise capital for the business as well to ensure that we can meet the demand for loans that currently exist. So in terms of outlook, of course, I think we made mention earlier this year that we're in the process of raising about $750 million to continue to grow the loan book at the rate of the demand. So this projection basically just highlights what I just emphasized, but it also shows our growth over the last 6 years. It's almost like a plane. It takes long to take off, but when it's in the sky, it's gone. So we just need to stay in the sky and soar. All right, so at this time, I'll invite Ken Rykar, our COO, to make his presentation and do a more deep dive into the loan portfolio.
All right. Thanks, Kadeen. Good morning, everyone. I am really pleased, very, very pleased to be here to present highlights of our loan portfolio for the year ended December 2022. Right now, the portfolio, as we saw earlier, would have seen some exponential growth in this aspect of the business during 2022. And as at the end of the year, it would have represented about 80% of our total asset, which is not only a fundamental component of our business, but the primary driver of our revenue. And as a result, we have prioritized as management some strategies that will ensure that the loan portfolio is consistently robust and very sound. So today I will share with you some of the key indicators that we as management will assess on a daily basis to ensure that the quality of the loan portfolio is sound and robust. Now, Kadeen would have spoken about this earlier, about being diversified in terms of the industries that we offer our services to. And if you look on screen, you will actually see a bar graph which shows, a pie chart which shows the different exposure to the various industries. And of course, this is an important element because it shows, it ensures that we can minimize the risk in the event of anything catastrophic, whether it is in the macroeconomic environment or the just the industry itself. As you can see, we would have been, the board would have established policies which ensures that we stay within a 30% limit for any given industry. And as at the end of 2022, we would have been below as it relates to all industries. So if you look at the chart, you will realize that the more prominent industries that would have disbursed loans to include the real estate and construction, trucking, haulage and transportation, as well as the retail industry. Now, another key indicator that we monitor is the ratio of secured to unsecured loans. Again, the CEO would have touched on this, and we would have learned from COVID that we need a very diversified or well-diversified portfolio. For us, we consider loans that are secured by motor vehicles and real estate to make up this category. And up to December 2022, we would have had a portfolio of roughly 78% being secured loans. And of course, again, this actually protects us as a company because in the event of default, it shows that we are able to recover almost 80% through asset repossession and liquidation. Now, on this page, we are looking at two very important metrics that we track on a daily basis, and I know that investors tend to look at these metrics, whether we publish a quarterly result or annual result. This is very key, and we would have seen that the ECL, which is really a measurement, it's really a measurement or a provision that is made given default. So, right. So one of the important things to note about the ECL is that this is impacted by the loan, whether it is in arrear or not. So it's really the provision that we have to make once we disburse a loan. Importantly, it is done by an independent expert. We ensure that for the integrity of the data, we get an independent expert to look at this matrix, and they will also take into account several assumptions, whether it is involved, whether it is in the macro environment or just historical performance of the company. But what we do recognize is that loans that are secured will most often have no impact on the ECL. So the mere reality that we have a very high percentage of secured loans ensures that our ECL remains pretty low. And management has been able to consistently keep this metric at a very manageable level and way below industry average. Most often it's in single digit, about 5%. So for 2022, we'd have ended at 4.1, which is really phenomenal for this nature of business that we're in. The non-performing loan is another vital indicator that we use to measure the quality of the portfolio. And this considers loans that customers, this considers loans that would have been over 90 days in arrear, or the customer would have been due on payments for over 90 days. We have managed again to keep this ratio at very manageable levels. I think for a microfinance institution, we are way below the industry average and more in line with commercial banking and credit union ratios when it comes to non-performing loans. It's very important to note that this metric is one that can vary. So if you have one significant account heading into the over 90-day bucket, then this can move from 6% to 9% in a month. However, again, based on the makeup of our portfolio being majority secured loans, you find that we can continually put levers in place to ensure that we collect and bring accounts out of the non-performing category. One of the next things that we continue to monitor is the portfolio by segment, and as a company, we strive to ensure that we remain diversified, and the portfolio is not exposed to any one segment or too exposed to any one segment. So during the period, we would have successfully expanded our product outreach in Guyana, and we would have launched Ultra Financier, which, as the CEO would have mentioned, would have turned a profit within only 2 months of operation. And I think that is really phenomenal, again, for the nature of this business. Oh, sorry. And as you can see on the chart, we would have had, in terms of the overall portfolio, we would have had Dolla Jamaica representing roughly 74% of the portfolio, while Guyana would have contributed 12%, and Ultra, newly on board, would have made up 14% of the overall portfolio. Now, beyond these key indicators, I'll briefly touch on some other key highlights of our performance of the loan portfolio during the financial year 2022. So at the end of the reporting period, our customer base would have grown to 7,000, and this is actually increasing from approximately 6,000 at the point in time when we did our IPO, which would have been in June, right? And of course, again, this highlights the fact that we continue to reach the market and that our customers are continually and increasingly placing trust in the brand and in the team at Dolla Financial. Our average loan period usually range from, it can range from a minimum of 3 months to a maximum of 30 months. And on average, the loans that we disbursed are somewhere about 9 to 12 months. And again, this flexible approach shows that we cater to the various financial needs of our customers. The average loan size would have been 570,000, up to December 2022. And this again indicates that we're not too exposed to any individual business or customer. And again, this prudent approach really ensures that we mitigate risk and it contributes to the overall stability of the portfolio. We also note that the business to consumer loan ratio was about 8 to 2 as at the end of the financial year 2022. And what this shows is that as a business, we are actually fostering business productivity and we're driving economic growth. It's a strategy that we took to focus more on business lending, and this has been working very, very well for us. The remaining 20% of the portfolio would have been just personal loans, or what we term as consumer loans. So in conclusion, the loan portfolio, it actually plays a very vital role in our business. It's really our bread and butter and what we generate all the profits that we return to the shareholders. We continue to diligently monitor this key indicator to ensure that it is robust, and we continue to ensure that we follow the procedures, the loan approval procedures and collections practices remain prudent, and we continue to maintain a well-diversified loan portfolio that is strongly based on quality. At this time, I will pause to introduce Trevine McKenzie, our CFO, who will present the highlights of the audited financial statements.
Good morning, everyone. I believe we're still in the morning segment. Shareholders and other members in our audience today. I like to think that this is the most interesting segment of any meeting, the financials. I'm not sure about you, but I am very pleased today to provide you with an overview of the 2022 audited financial statements and our most recent financial performance in Q1 of 2023. So let's just begin with our highlights. So as at the end of December 2022, our interest income stood at 740 million, which really increased by 95%, up from December 2022. Our profit before tax increased to 296 million, which represents an increase of 76% from 2021. Our net interest income, that's interest income net of our interest expense, stood at 661 million, which represents an increase of 103% year over year. And our earnings per share actually decreased to 18 cents per share by 98%. But of course, we have been following and we're aware that this is due to the increase in the amount of shareholders we have. So effectively, the profit is being split between more persons for that metric. Now, we have really experienced just about 5 years of tremendous growth, moving from 121 million in terms of our loan portfolio in 2018 to 1.7 billion in 2022. And you'll notice in particular that there was a 129% increase between 2021 and 2022. And we can very easily say that this growth is attributable to the capital raises we would have executed in 2022 that were effectively deployed by our team, and Kenroy would have made significant mention of that effective deployment. Our total assets also saw significant growth, and we won't spend much time here. As you would have been following, our assets are mainly made up of our loan portfolio, but nevertheless, we would have grown to $2.2 billion, and we are really, really happy about this growth in 2022. Now, in terms of our operating expenses, we would have seen significant increase, we wouldn't say growth, increase here from 69 million in 2018 to just about $340 million in 2022. Now, we would have seen this 57% growth because we would have the costs would have increased significantly in 2022. You would have noticed we built out our senior management team, and we would have increased other members of staff to be able to facilitate the growth we would have anticipated in 2022 due to the IPO and the market that would have come about from that. We also saw an 8% increase in legal and professional fees, which basically was as a result of, firstly, the IPO. We would have spent quite a bit of funds to ensure that we got this marketing push out. We would have saw that, and then we would have also done the bond raise, which definitely would have increased our expenses. We also saw significant growth in our advertising expenses. We are seeing our marketing collaterals here today. We are seeing our billboards out on the highways. We have about 5 billboards out. And we have been increasing merchandise, etc., to ensure that we are able to pull on that, on the market engagement and ensure that our customers and the market at large, they feel involved and they are able to, see the fruits of what we're doing here. What we have done over the years, though, even though you are seeing this increase, we have ensured that we maintain very lean expenses. An example would be that we would have loved to have a 5-course meal here today. However, that was not a part of the budget. So we're keeping it very lean as possible to ensure that we are able to turn over those revenues. And here we have a complete split of how we would have allocated those expenses in 2022. We also have depreciation and amortization that would have seen 5.9% of our total expenses. We would have built out our branches, and we would have had to increase the branch sizes to facilitate the staff that we would have had to hire to facilitate the demand. Management fees and audit fees also saw an increase throughout the period. We also ensured that we returned value to our shareholders. We would have declared and paid a dividend in December 2022 of $94 million. And Kadeen did make mention of this earlier, so we're pleased to be able to facilitate that. Now, in terms of our balance sheet, our assets would have landed at $2.2 billion, which was an increase of 161% year over year. And of course, this was mainly due to our loan portfolio growth. Our equity stood at $721 million as at the end of 2022. And this was as a result of, firstly, the increase in share capital due to the IPO, and of course, the increase in retained earnings over the period. If you have been following, you would have seen our comprehensive income increasing, and we did make mention of that earlier in the presentation. Lastly, our liabilities would have also increased to 1.5 billion, and we have been speaking about this for quite a few months. We would have raised that $1.1 billion bond in October 2022, coupled with quite a few other liabilities that we do have, the results of doing business. Now, in terms of our ratios, there's one important metric that we tend to pay attention to, and it's our efficiency ratio. I did make mention before that we tend to be quite lean with our expenses, and through that, we have achieved 49% in terms of an efficiency ratio in 2022. And when we look at the market, this is quite good, for lack of a better word, in terms of what we're able to achieve. We have seen an increase since 2021, but of course we did explain that in order to grow the business, we would have had to spend and increase expenses to get where we are. And of course, all the other metrics you are seeing on the screen are within the range that we would have projected for the business. Now, in terms of our Q1 2023 highlights, looking at where we were last quarter, we would have done an earnings call recently, which outlined that we continue on the growth trajectory we have embarked on for 2023. Our income increased by 110% to $297 million. Net interest income by 93% to $249 million. Another important metric would be our loan portfolio, which as at March 2023 stood at 2.3 billion. And Kadeen did mention that we are now up to 2.4, and this represents our April numbers. Assets, of course, went up to 2.5 billion as a result of the loan portfolio growth. And of course, our profit before tax stood at $125 million, an increase of 90% year over year. And Kadeen did mention that with this 125 million, it sets us at a run rate of about $40 to $42 million. And with this kind of a run rate, we are anticipating that we will land at that $500 million mark for profit before tax as at the end of the year. So we will be working assiduously to getting those returns for our shareholders. And again, we would have returned value to our shareholders in April 2023 with a dividend payment of 2 cents per share, which was a total of $50 million. And again, we are pleased to be able to do this for our shareholders. As Kadeen mentioned, you cut a check to us, we cut a check back to you, and we're quite happy about that. So really, we are a young company. We just listed on the stock exchange. But as a team, we have strive to ensure that we fulfill our promises to you, our shareholders, by, returning constant growth and continuing to be innovative in our decisions and our strategies, and ensuring that we are also transparent. That's another important thing that we ensure that we do as a company. Transparency is something that we pride ourselves with. At this time, I'd like to hand over to Tiffany Taylor, Assurance Manager at PwC, who will take you through the auditor's report. Thank you.
Thank you, Trevine. Good afternoon, everyone. All protocols observed. Independent Auditor's Report. To the members of Dolla Financial Services Limited. Report on the audit of the consolidated and standalone financial statements. Or opinion. In our opinion, the consolidated financial statements and the standalone financial statements give a true and fair view of the consolidated financial position of Dolla Financial Services Limited, the company, and its subsidiaries, together the group, and the standalone financial position of the company as at 31 December 2022, and of their consolidated and standalone financial performance, and their consolidated and standalone cash flows for the year then ended in accordance with International Financial Reporting Standards, IFRS, and with the requirements of the Jamaican Companies Act. What we have audited. The group's consolidated and standalone financial statements comprise the consolidated statement of financial position as at 31 December 2022, the consolidated statement of comprehensive income for the year then ended, the consolidated statement of changes in equity for the year then ended, the consolidated statement of cash flows for the year then ended, the company statement of financial position as at 31 December 2022, the company statement of comprehensive income for the year then ended, the company statement of changes in equity for the year then ended, the company statement of cash flows for the year then ended, and the notes to the financial statements, which include significant accounting policies and other explanatory information. Basis for opinion. We conducted our audit in accordance with international standards on auditing ISOs. Our responsibilities under those standards are further described in the auditor's responsibilities for the audit of the consolidated and standalone financial statements section of our report. We believe that the audit evidence we have obtained is sufficient and appropriate to provide a basis for our opinion. Independence. We are independent of the group in accordance with the International Code of Ethics for Professional Accountants, including international independent standards issued by the International Ethics Standard Board for Accountants, IESBA code. We have fulfilled our other ethical responsibilities in accordance with the IESBA code. Our audit approach. Audit scope. As part of designing our audit, we determine materiality and assess the risks of material misstatement in the consolidated and standalone financial statements. In particular, we considered where management made subjective judgments, for example, in respect of significant accounting estimates that involve making assumptions and considering future events that are inherently uncertain. As in all our audits, we also address the risk of management override of internal controls, including, among other matters, consideration of whether there was evidence of bias that represented a risk of material misstatement due to fraud. How we tailored our group audit scope. We tailored the scope of our audit in order to perform sufficient work to enable us to provide an opinion on the consolidated financial statements as a whole, taking into account the structure of the group, the accounting processes and controls, and the industry in which the group operates. The context of our audit is set by the group's major occurrences and business activities for 2022. The group's businesses are the provision of lending services to small and medium-sized enterprises through microlending and also secured lending to high net worth individuals. In June 2022, the company was listed on the junior market of the Jamaica Stock Exchange through an initial public offering IPO. The group also raised debt through the capital markets and incorporated a new subsidiary, Ultra Financier Limited, which is located in Jamaica. We determined the scope of our audit by first considering the internal organization of the group and then identifying the components of the audit that have the most significant impact on the financial statements. The group comprised 3 reporting components, all of which represent the principal business units within the group and are located in Jamaica and Guyana. Full scope audits were performed for 2 components, while an audit of 1 or more financial statements line items was performed for the remaining component. The audit work performed covered 100% of the group's total assets and 100% of total revenue. 2 of the reporting components were audited by PwC Jamaica, while the other component, located in Guyana, was audited by a non-PwC firm familiar with the local laws and regulations to perform this audit work. Throughout the audit, we had regular meetings and correspondence with management and component auditor teams to follow up on progress of work for all components. The group engagement team reviewed work papers relating to the audit approach and findings of the component auditors. Key audit matters. Key audit matters are those matters that, in our professional judgment, were of most significance in our audit of the consolidated and standalone financial statements of the current period. These matters were addressed in the context of our audit of the consolidated and standalone financial statements as a whole and informing our opinion thereon, and we do not provide a separate opinion on these matters. Key audit matter. IFRS 9 financial instruments, probabilities of default, forward-looking information, and significant increase in credit risk, group and company. Refers to notes 3F, 4B, 7, and 27A to the financial statements for disclosures of related accounting policies, judgments, estimates, and balances. As at 31 December 2022, loans, net of provision for credit losses, total 1.7 billion and 1.3 billion on the group's consolidated and the company's standalone statement of financial position, respectively. These balances represent 77% of total assets for the group and 64% of total assets for the company. The impairment provisions recorded under the IFRS 9 expected credit loss ECL model amounted to 72 million for the group and 66 million for the company. The IFRS 9 ECL impairment model takes into account reasonable and supportable forward-looking information, as well as probabilities of default, PDs. PDs represent the likelihood of a borrower defaulting on its obligation over the next 12 months or over the remaining lifetime of the obligation. PDs are developed by management based on the group and company's specific historical default rates for each industry classification. In performing historical analyses, management identified economic variables impacting credit risk and ECLs for each portfolio. Various scenarios were identified and weightings assigned using macroeconomic factors as well as management's experience and judgment. Management also performed scenario analyses to determine the impact of future economic conditions on PDs in the countries and industries where the group and company have loan exposures. A macroeconomic indicator is determined, which is statistically linked to the credit risk loan exposure. We focused on this area because of the complexity of the techniques used to determine PDs and the number of significant judgments made by management regarding possible future economic scenarios. We further focus on management's assessment of significant increase in credit risk, SICR, as stage migrations can materially impact the ECL. Management's determination of PDs, forward-looking information, and SICR was made with the assistance of an external expert. How our audit addressed the key audit matter. Our approach to auditing the matter involved the following procedures, amongst others. We updated our understanding of management's ECL model, including any changes to source data and assumptions, and tested the mathematical integrity of the model. We evaluated the competence, independence, and objectivity of management's expert. We evaluated the design and tested the operating effectiveness of certain relevant controls over the forward-looking information and SICR in the ECL determination by performing inquiries with management and inspecting management's evaluation, review and approval of key assumptions, judgments, and forward-looking information. We evaluated with the assistance of our specialists the appropriateness of management's judgments pertaining to forward-looking information, including macroeconomic factors and the basis of the multiple economic scenarios used. We sensitized the various inputs and assumptions as part of our reasonableness tests. We evaluated the reasonableness of management's judgment pertaining to PD, SICR, and forward-looking information, including macroeconomic factors. We tested the completeness and accuracy of the historical data used on a sample basis by agreeing the details of customer payment profile to source documents. We tested the staging of a sample of loans by reference to the number of days outstanding on the loan. We tested the critical data fields were applicable used in the ECL model for the PD determination, such as default rate, effective interest rate, write-off data, and loan type by tracing back data to source documents. We evaluated the reasonableness of the weightings used for the base case, upside and downside scenarios by agreeing the forward-looking economic information to external sources published or pronounced by reputable third parties. We sensitized the probability weightings used in the ECL calculation. The results of our procedures indicated that the assumptions used by management for determining the probabilities of default, significant increase in credit risk, and forward-looking information were not unreasonable. Other information. Management is responsible for the other information. The other information comprises the annual report, but does not include the consolidated and standalone financial statements and our auditor's report thereon, which is expected to be made available to us at the date of this auditor's report. Our opinion on the consolidated and standalone financial statements does not cover the other information, and we will not express any form of assurance conclusion thereon. In connection with our audit of the consolidated and standalone financial statements, our responsibility is to read the other information identified above when it becomes available, and in doing so, consider whether the other information is materially inconsistent with the consolidated and standalone financial statements, or our knowledge obtained in the audit, or otherwise appears to be materially misstated. When we read the annual report, if we conclude that there is a material misstatement therein, we are required to communicate the matter to those charged with governance. Responsibilities of management and those charged with governance for the consolidated and standalone financial statements. Management is responsible for the preparation of the consolidated and standalone financial statements that give a true and fair view in accordance with IFRS and with the requirements of the Jamaican Companies Act. And for such internal control as management determines is necessary to enable the preparation of consolidated and standalone financial statements that are free from material misstatement, whether due to fraud or error. In preparing the consolidated and standalone financial statements, management is responsible for assessing the group and company's ability to continue as a going concern, disclosing as applicable matters related to going concern, and using the going concern basis of accounting unless management either intends to liquidate the group or the company or to cease operations or has no realistic alternative but to do so. Those charged with governance are responsible for overseeing the group and company's financial reporting process. Auditors' responsibilities for the audit of the consolidated and standalone financial statements. Our objectives are to obtain reasonable assurance about whether the consolidated and standalone financial statements as a whole are free from material misstatement, whether due to fraud or error, and to issue an auditor's report that includes our opinion. Reasonable assurance is a high level of assurance, but is not a guarantee that an audit conducted in accordance with ISOs will always detect a material misstatement when it exists. Misstatements can arise from fraud or error and are considered material if individually or in the aggregate, they could reasonably be expected to influence economic decisions of users taken on the basis of these consolidated and standalone financial statements. As part of an audit in accordance with ISOs, we exercise professional judgment and maintain professional skepticism throughout the audit. We also identify and assess the risks of material misstatement of the consolidated and standalone financial statements, whether due to fraud or error, design and perform audit procedures responsive to those risks, and obtain audit evidence that is sufficient and appropriate to provide a basis for our opinion. The risk of not detecting a material misstatement resulting from fraud is higher than for one resulting from error, as fraud may involve collusion, forgery, intentional omissions, misrepresentations, or the override of internal control. We obtain an understanding of internal control relevant to the audit in order to design audit procedures that are appropriate in the circumstances, but not for the purpose of expressing an opinion on the effectiveness of the group and company's internal control. We evaluate the appropriateness of accounting policies used and the reasonableness of accounting estimates and related disclosures made by management. We conclude on the appropriateness of management's use of the going concern basis of accounting, and based on the audit evidence obtained, whether a material uncertainty exists related to events or conditions that may cast significant doubt on the company or the company's ability to continue as a going concern. If we conclude that a material uncertainty exists, we are required to draw attention in our auditor's report to the related disclosures in the consolidated and standalone financial statements, or if such disclosures are inadequate, to modify our opinion. Our conclusions are based on the audit evidence obtained up to the date of our auditor's report. However, future events or conditions may cause the group or company to cease to continue as a going concern. We evaluate the overall presentation, structure, and content of the consolidated and standalone financial statements, including the disclosures, and whether the consolidated and standalone financial statements represent the underlying transactions and events in a manner that achieves fair presentation. We obtain sufficient appropriate audit evidence regarding the financial information of the entities or business activities within the group to express an opinion on the consolidated financial statements. We are responsible for the direction, supervision, and performance of the group audit. We remain solely responsible for our audit opinion. We communicate with those charged with governance regarding, among other matters, the plan, scope, and timing of the audit and significant audit findings, including any significant deficiencies in internal control that we identified during the audit. We also provide those charged with governance with a statement that we have complied with relevant ethical requirements regarding independence, and to communicate with them all relationships and other matters that may reasonably be thought to bear on our independence, and where applicable, actions taken to eliminate threats or safeguards applied. From the matters communicated with those charged with governance, we determine those matters that were of most significance in the audit of the consolidated and standalone financial statements, the current period, and are therefore the key audit matters. We describe those matters in our auditor's report unless a law or regulation precludes public disclosure about the matter, or when, in extremely rare circumstances, we determine that a matter should not be communicated legal and regulatory requirements. As required by the Jamaican Companies Act, we have obtained all the information and explanations which, to the best of our knowledge and belief, were necessary for the purposes of our audit. In our opinion, proper accounting records have been kept so far as appears from our examination of those records, and the accompanying consolidated and standalone financial statements are in agreement therewith and give the information required by the Jamaican Companies Act in the manner so required. The engagement partner on the audit resulting in this independent auditor's report is Garfield Rees. PricewaterhouseCoopers, Chartered Accountants, 15 March 2023, Kingston, Jamaica. Mr. Chairman, back to you.
Thank you, Tiffany. That was an earful. So at this time, we will invite Jordan Chin, Company Secretary, to go through the ordinary resolutions.
Good afternoon again, everyone. Again, I will ask shareholders who are present in the room to be reminded of the protocols which I indicated at the beginning of the meeting, that the default for votes to be taken should be on your phones when you log in as a shareholder. However, if you are having technical difficulties logging in, I will accept your vote by raise of hand. And for the shareholders online, if you're having any difficulties, again, the contact number for help is 876-927-4881. I will move directly now into the resolutions. Could we have the resolutions put on the screen, please? Perfect. Ordinary resolution number 1, the audited accounts, that the report of the Board of Directors and the audited accounts for the financial year ending December 31st, 2022 be and are hereby adopted. Could I ask for a motion in the room from a shareholder? Yeah. David Rose, shareholder, has motioned, second by Dr. Michael Banbury. I'll ask for 30 seconds now for persons to vote online. As again, shareholders in the room that have difficulty voting online, I will accept a raise of hands. Okay, resolution 1 has been carried by a majority vote. We move on to resolution number 2, to ratify and declare a special dividend resolution, that the special dividend of Jamaica dollar 0.0376 per share paid on December 6, 2022 to shareholders on record as at November 25, 2022 be and is hereby ratified and declared final for the year ended December 31st, 2022. Could I have a motion in the room? Dr. Michael Banbury, and seconded by David Rose. We'll have 30 seconds to vote on this resolution now. The resolution has been carried. Resolution 3, to retire, re-elect, and appoint directors. That the directors who retire by rotation pursuant to Article 102 of the Articles of Incorporation are Ryan Reed, Kadeen Mears, Lisa Lewis, Dane Patterson, and Michael Banbury. Resolution 231 reads that Mr. Ryan Reed, who retires by rotation and being eligible for re-election, be and is hereby re-elected and appointed as a director of the company. Could I have a motion, please? Yes, David Rose, and seconded by Dr. Michael Banbury. Voting will commence. The resolution has been carried. Resolution 3.2, that Mr. Kadeen Mears, who retires by rotation and being eligible for re-election, be and is hereby re-elected and appointed as a director of the company. Could I have a motion, please? Mr. Norman Reed, and seconded by Trisha Nicholas. The resolution has been carried. Resolution 3.3, that Ms. Lisa Lewis, who retires by rotation and being eligible for re-election, be and is hereby re-elected and appointed as a director of the company. Could I have a motion, please? Mr. Norman Reed, and your name, sir? Mark Barton? Mark Barton. Thank you. Once it's recorded properly. Voting can commence. Resolution has been carried. Resolution 3.4, that Mr. Dane Patterson, who retires by rotation and being eligible for re-election, be and is hereby re-elected and appointed as a director of the company. Could I get a motion, please? Trisha Nicholas, motion. Seconded. Kerry Spencer, thank you, seconded. Voting can commence. The resolution has been carried. Resolution number 35, that Dr. Michael Banbury, who retires by rotation and being eligible for re-election, be and is hereby re-elected and appointed as a director of the company. Could I have a motion, please? Mr. Shoni Ellis, and seconded by Mr. Norman Reed. Resolution has been carried. Resolution number 4, authorize the board to appoint auditors. That the board of directors be and are hereby authorized to appoint the auditors of the company. Could I have a motion, please? Mr. Mark Barton and Mr. David Rose. Thank you. The resolution has been carried. Resolution number 5, to authorize to fix the remuneration of the auditors. That the board of directors be and are hereby authorized to fix the remuneration of the auditors for the company. Could I have a motion, please? Ms. Tricia Nicholas has motion, seconded by Mr. Kenroy Kerr. The resolution has been carried. Final resolution, resolution number 6, to authorize to fix the remuneration of the directors. That the board of directors be and are hereby authorized to fix the remuneration of the directors of the company. Could I have a motion, please? Ms. Trevine McKenzie, seconded by Mr. Kenroy Kerr. The resolution has been carried. We now move on to agenda item number 9, the results of the voting and the poll. The results have been indicated after each resolution was put on the screen for voting, and there was no need for any polls to be called at this meeting. We will now go into agenda item 10, which is questions and answer sections. As indicated, Yes, as indicated, we have requested that questions be emailed and also questions be placed in the Q&A on the online platform. We have selected questions on those two mediums that will be displayed on the screen and answered by the panel. And if your question has not been answered, please note that we have taken into consideration time constraints and also to be able to give each shareholder an opportunity to ask questions. So if you ask 10 questions in the chat, there may be only one or two answered. That will be given each and every opportunity for each shareholder to ask a question.
All right. First question, Matthew Preston, and the question reads, what is the target for your loan book by the end of 2023? I think it's a question for Kadeen.
All right, so the target for the loan book is $3 billion for the end of 2023.
All right, next question, Michael McKenzie. Any updates on Guyana expansion? Kadeen?
Updates on Guyana expansion. The board of directors has taken the decision that management should focus on the Guyana operation, on the Georgetown operation currently, rather than expanding based on the resources to the Burpees area. So we will be continuing to grow the loan portfolio in Georgetown rather than opening a new location outside of Georgetown for the moment.
Next set of questions. Malik Barnett, what is the company vision in the next 10 years or for the next 10 years? Kadeen?
The next 10 years, the natural evolution of any finance company is, to offer additional financial services. So if we were to be ambitious, I would say that we see ourselves being a neobank in the next 10 years.
And Matthew Preston again, what is the expectation for profits this quarter in comparison to your previous quarter ending March 31st? Kadeen?
Based on our current run rate, our profitability, as mentioned by our CFO, is at around 40 to 42 million. So for this quarter, we're expecting to hit 100 million. Approximately, which would be an increase year over year of probably 70% or more.
Thereabout, yes.
All right, thank you. That's it for the online questions. We will take questions from persons in attendance. And I see Mr. Rose with his hands up, or hand up. We're going to ask, due to a time constraint, that we limit the questions to one per person.
Can I make two, Chairman? All right. Can you hold some? Thanks. So, first question. I know that Dolla is planning to open a new branch in Clarendon, and you opened another branch for Ultra just recently this week. So, I know that the book is growing considerably, especially on a secured basis. But in terms of, going into other parishes, like what does that look like for Dolla? And then with respect to Ultra, like what's saturation like right now, like an estimated value of the book?
So I mentioned earlier in my presentation that each time we open a branch, it will require the approval of the Bank of Jamaica. So that will restrict the pace at which we can open a new location. Currently, the location for Clarendon is ready, but we still have to wait on the go-ahead from Bank of Jamaica. So that's what we're actually waiting on. In terms of Ultra's locations will be less. In terms of location, it would be less locations and more just be strategic locations. So we try to focus on more urban areas based on the clientele. So once we open a location in Kingston, one in Montego Bay, that would be sufficient for the growth of Ultra. Outside of Jamaica, we'll now focus on cities that have high net worth individuals who might need access to credit. Recently, our CEO, David Henriquez, made a trip with the delegation to Domrep. So that's one of the markets that we're eyeing next.
And with respect to funding this growth, because the loan book needs capital, and also the company is still ambitious for acquisitions and even to expand to, for example, St. Lucia and other markets. So I know earlier you spoke about a potential $5 million opportunities to secure funding, but like what is the funding path looking like right now? And with respect to acquisitions, like what is realistically going on now?
In terms of funding, it's a continuous effort. We are currently in dialogue with several investment banks, both locally and overseas, and we're in advanced stages of raising capital. Each conversation that we have, we typically look to raise in US dollars around 5 million US. So that would bring our loan book to where I had mentioned earlier of about $3 billion.
All right, so we will look back to you, David. We have a question from Mr. Pate.
Access Financial Services, sir. It has been about 7 months now.
This sounds like a hostile question.
No, it's not, sir. But could you speak as to your interest, if there is no longer an interest there? And if there is, how do you intend to exploit that interest?
All right, so I think I'll take this question. So as a board, we have mandated the management team being led by Kadeen to be very aggressive in the growth of the business, both organically and growth via acquisitions. We are constantly scouting the industry to see where those opportunities lie. And I would safely say that every company is being looked at in the market. How I want it to. No. We have not given up on any acquisition opportunities. Any acquisition opportunities. Any other questions on the floor? Or we have one over here?
Okay, good afternoon. Marlon Rodan here. What is the time to recovery and the recovery rate on loans in default?
Can you speak a little louder, please?
Sure, sorry. What is the time to recovery and the recovery rate on loans in default?
Shireen or Kenoi?
Mic check. All right, so typically the recovery and timeline will be dependent on the type of asset that we actually have to secure the loan. So of course, if we're dealing, you can realize that the majority or 80% of the portfolio is secured, which means that if we are dealing with a customer with a property held as collateral, you're looking at a longer time frame, maybe between 6 and 12 months. But if it's a motor vehicle that secures this loan and we have to repossess and liquidate, you'd be looking at anywhere between two weeks to a month.
All right, thank you. Any more questions? I see a question on the back.
Good morning. Asking if there are any plans for expansion in Panama.
Kadeen?
As Ryan said, the board has mandated the management to look at expansion efforts. This can be through acquisition, etc. New markets is also one of the things that we focus on. And countries like Panama was one country that we were looking at before we visited there. We were on the ground. But opening a new location in a foreign territory takes a lot of due diligence, a lot of time. have to look at a lot of factors for barriers to entry, language, talent, etc. So a lot of this takes a lot of time. It's easy to lend the money, but sometimes it might be hard to collect. So you really have to understand the culture of the market and ensure that it fits with, our business model as well. So to answer your question, yes, that was one market that we were looking at, and we continue to look at that market.
Any more? Yes, sir.
Last year, Kadeen was spoken to by that lady from our ambassador there in Washington about that company that was willing to look at exploring some financing. I would have spoken to you. You would have said that you're going through the motions. So can I get an update on that 5 months later? Have you secured any financing from that entity?
I can have Trevin can answer that one.
So we have been doing a due diligence exercise. Check. All right, so we have been doing a due diligence exercise, and with the type of company that has been, that we are exploring to borrow from, their due diligence does take some time. Kadeen did mention in our previous earnings call that we do expect these funds to be deployed somewhere around Q3, Q4 of this year, and we're working assiduously to provide the company with everything that they need to be able to disburse these funds.
So to answer your question, closer to September.
All right, we'll take one more. David?
So, I saw earlier back, I believe it was January, where it was announced that Dolla and Fostwich, will be looking towards, financing solar projects. So, with respect to that product, has it begun as yet? And, with respect to diversifying the product range through partnerships, any new potential arrangements on the table? Your mic. You want to borrow mine?
That's fine. So we continue to build partnership. I think just yesterday we signed off on a partnership that we will announce in very short order. We have successfully partnered with about 4 companies since the start of this year. The Fostwich partnership is going very well. We have a lot of interest in that product, and we continue to assess those applications to ensure that we're actually disbursing funds prudently. But in terms of partnership, that is a key strategy for us, and we are very selective in who we approach to become our partners, and that is something that we will continue in Q3 and onto the end of the year. But there will be an announcement shortly about a partnership that we signed off just yesterday.
All right. Thank you, Kenroy. And Kadeen and his team started to do something very transformative here in Jamaica with respect to the quarterly earnings call. So I'd say following the release of the Q2 financials, there'll be an opportunity to feed your questions there. We move to item number 11, termination of the meeting. I want to thank you again to all our shareholders who are here today, those who are online. I want to say thanks to the board of directors, the management team, the staff at Dolla, and most importantly, our customers. The meeting is now terminated at 12:45. Thank you.